Alright guys, welcome back to the channel with the most reliable trading strategies for the boom and crash markets. Whether you want to be scalping the boom and crash markets or you want to be catching spikes from the boom and crash markets, you are safe using our strategies. All you have to do is just follow the instructions that we share and make sure you do the same thing and you will be good. I like to urge you, if you make profits using these indicator-based strategies, you want to use it to improve your skill. You don't want to rely full-time on these indicators. Reason is that indicators are designed to follow market direction, right? It's designed to follow price, rather. Indicators are designed to follow price, and that means that price is already going somewhere and an indicator is just following it, so to give you a direction of where the market is headed. Whereas you can actually trade real time, you can actually analyze the market real time without these indicators. That means you can actually detect or predict the direction of the market just before it happens without these indicators, which is more reliable than using the indicator based strategies. So ensure to pay a mentor, somebody who knows how to trade the market, how to analyze the market using price action strategy or any other valid strategy that is proven and it works, right? So that you can learn to make money out of these markets for a very long term. So guys, I've already entered and left the market before making this video. So this right here, just about here, is the entry. Price is actually fast approaching the area where there is likely to be a spike. Now for the sake of this strategy, we are using CCI indicator and RSI indicator. Okay, the indicator CCI is actually an oscillator, which, if you are old to my channel, if you are somebody that is already in my channel, you would already have known what oscillators do. I like to explain it. Oscillators are designed to show you where there is likely to be a change in the market momentum, right? CCI will show you where there is likely to be buying pressure or selling pressure in the market. Okay, so this would have been your entry if you had entered this trade with me, and probably by now it'll be out of the market because, like I said, price is fast approaching the area where there is likely to be a change in market direction, right? Market is likely to expect a spike just around this axis. That means you would have been out of the market before this happens. All right, you would have been out before this happens. There's also a tendency of price breaking that level and coming back down here. If that happens, then it's good. It's good, but you don't want to take chances. The market is not our own. We are just here to take and leave, right? So for the sake of this strategy, like I said, we are using CCI indicator, we are using RSI indicator, and we are using the moving average indicator on our main chart. And I'll go ahead right now to show you guys the setup of these indicators so that you set it up, and then we'll go into explaining how it works. We'll go into explaining how it works, guys. So for the main window, we will be needing our moving average with the following properties: period 5, shift 0, method exponential, apply to close. Levels are not needed, so you just leave it blank. For visualization, leave it at all time frames. And for styling, you can see I'm using black color. You can decide to use black color if you want, or any other color that would be visible on your chart. Make sure it is a color that would pop on your screen, right? Click done when you're done with that, and your moving average would appear on the main chart. All right, and then for the other indicators, we'll be adding them to the indicator window. So your CCI, your commodity channel index, will automatically create you an indicator window, which is where you will also put your relative strength index. Okay, so for our CCI, we are going to be using period of 50, apply to close, levels 0, 0. You don't need any levels there, of course. I don't want to see any of these things. I just leave it blank. Click done, leave it blank. Don't put anything there, please. And then for visualization, you want to leave it at all time frames, of course. For style, this is where you change your style. You can put whatever color you want. My own is just, I think that is maroon color, whatever color that is. We are not here to determine colors. All right, so you can decide to use whatever color of your choice. I can decide to use blue right now. All right, so I have blue, and the pixel is 3. I'm using the third pixel. It's good for me. So you click done when you're done with that, and you will have your CCI on your indicator window, just like that. This is your CCI on your indicator window. This is your CCI on your indicator window, right? The blue line running across your indicator window is your CCI. The only color that we chose that would be visible on our chart. That's why you're only seeing your the blue line. All right, so the next indicator would be the RSI, and we are going to be adding that still under the indicator window 1. So what you have to do is just click the plus sign that is next to the indicator window 1, and then you add your RSI, your relative strength index, period of 40 applied to close levels 90 and 10. Time frame, of course, you should leave it at all time frames. And for the style, you don't want any colors here, right? You just need to change the color for levels, right? So you just go to levels and make sure the color is visible on your chart. Make sure it pops on your chart. I'm using black color. You can decide to use same. Level is 90 and 10. And then you click done when you're done with that, right? You should have your RSI, which is also the oscillator indicator. It will show you an area on your chart where there is likely to be bullish or bearish momentum. Okay, now we have our indicator set up on our chart. How do we actually utilize this to make profits? How do we utilize this to make profits? Now you can see that I told you guys that this would have been an ideal entry for you if you had entered this trade. This would have been an ideal entry for you if you had entered this trade, right? And you can see how far down it is running. It has even broken the region where I suggested price might likely break, and it's coming towards this other angle now. Yeah, now you can see how much that would have been made from this entry, guys. See how much that would have been made from this entry. Now, how did I come up with that entry? How do I know that the market is going to give us a selling opportunity at that region? Now, if you are familiar with price action, it's best you check your candlesticks and see that there are bearish candlesticks, bearish candlestick patterns, bearish chart patterns, whatever chart pattern that you're familiar with. You should be sure you see that on a 15 minutes or 30 minutes time frame, or even on a 1 hour time frame if possible. All right, if you see that, it's okay. If you don't see that, all you need to do is just look out for rejections on the 15 minutes time frame, just like this, just like what we have here. You can see this rejection, this bearish rejection on the 15 minutes time frame. You can see price is already pointing downwards, and there was that much rejection of price at that region from the buyers. So once you see that, of course, if you can also detect the trend of the market on a higher time frame, that's fine. And if you can't do that with your naked eyes, the indicator, the moving average indicator on your main window is there to help you. All you have to do is just see that the moving average is above price level. You can see around this region, you can observe that the moving average was just below price level, right? While price was just rallying above it, right? Price was just rallying above the moving average at that region, and you can see price was consistently just pushing to the upside, right? But if you check again, this is not so clear. Maybe I should go to a different time frame. I want it to be very clear so that what I'm explaining will be well understood. Now look at this area. It's not as clear as it should be, but let's just look at this area. not there, not there, not there, not there. Excuse me, I just shifted that. Why did I do that? Okay, on this area, as you can see, it is more like price is below the moving average, right? Spikes into the moving average and then still manages to come back below the moving average, while the moving average is just above the price region. So if you see that clearly, that is telling you that price is in a downtrend. The moving average is an indicator that describes the trend of the market, right? It tells you the trend of the market. It tells you the direction of the market. Okay. So having seen that price is in a downtrend, this is for the boom 1000. All right. We see that price is in a downtrend and you've seen a clear bullish momentum, sorry, a clear bearish momentum on the higher time frame, such as the 15 minutes time frame or the 30 minutes time frame, as the case may be, or even the 1 hour time frame, right? Then that prompts you to go down to your 1 minute time frame and look out for the confirmations I'm going to be listing right now. Now, first of all, you want to see that on your main window there is a crossing of price below your moving average, right? Ensure that price has crossed below your moving average. You can see initially price was just above the moving average here, and then what happened next? It dropped and then went below the moving average. All right, it has spiked. Remember I said it was close to when it was going to spike. I'm still going to explain how you know your exit point, so pay attention, guys. Now that spike would have destroyed almost all the profits that you made if you did not leave the market. So as well as you should as much as you should know, you should have a defined entry. You should also have an exit plan, right? You should also have an exit plan. So all you want to do is see that price has crossed below the moving average on the main chart after the other conditions have been met. And then another condition you need to meet is to see your CCI indicator above the level 90 of the RSI indicator here, the black line above the RSI indicator here. Ensure that you see that there is a crossing above it, and then price is now coming back down from that level, right? That gives you a prompt to sell. All right, and then when you sell, you want to sell down to when price is closing in on the level 10, which is the oversold region on your of your RSI. Yeah, the oversold region of your RSI, which is this area. Okay, you don't want to wait till it gets, you don't know when exactly it's going to reverse from there, right? So you don't have to wait till it touches that region. You just go out when it goes close to that region, right? Go out when it goes close to that region and you'll be safe. All right, you'll be safe. Now another strategy that I use to decide when I'm leaving, when I'm supposed to leave the market, is that I like to add level 50 to my RSI, right? I like to add level 50 to my RSI, which would give me this line here. All right, so that when price has come to that region, I'm always expecting price to spike to reverse from that region, right? I'm expecting price to reverse from that region. So that means before it gets to this region, I'm already out of the market. I've already secured my profits from the market. And then if eventually it breaks out of that region and continues to sell, I'll wait for it to probably pull back into that region and give me a selling signal again, right? I'll wait for it to pull back and give me another selling signal, and then I'll probably just enter the market again from there and ride down to level 10. Okay, and ride down to level 10. But it's best you leave, once you leave the market, you simply allow it to go back into the level 90 before you think of selling again. This is just an aggressive way to trade, which works for me a lot of times too. Now you can see that if the conditions I just explained are met, you will be in profit. You can see all of this. That is me showing you more areas where what I just explained played out very well. All right, played out very well. Sorry about that. Okay, so you can see price crossing the moving average on the main chart. You can of course see what is it called, can as well see price coming to level 90 of the RSI, and then you can see what happened next. Price just keeps dropping after it touches the level 90 and drops from there. You can see that the market just keeps selling at that moment. If I keep back testing, you will keep seeing more. The times that you will not see this play out is when you probably did not check your higher time frame to see that the market has signaled a bearish momentum. Now this is for the bull market. Okay, this is for the bull market. For you to successfully trade using this strategy on the crash market, you are doing the opposite of what you are doing here. All right, you are doing the opposite of what you are doing here. So let's say for crash 1000, you want to be buying the market instead of selling, and you want to be buying from this level up to this level. Okay, so that means you can see here already this strategy is very simple and yet very effective. You can see that price having the CCI having gotten to this region 10, and then thank God I added the level 50 for you guys to see what I was just saying. It's playing out here on the crash 1000. You can see pulled into the level 50, which I just added, and then after this crossing would have been my ideal entry. After the crossing of this moving average, it would have been my ideal entry, and then all the way to this region. You can see that it dropped again from that region. It dropped again from that region, you see, and that was the level 50 region that I just explained. And then for this one, you can see this is actually really simple to understand, and yet very powerful, So I urge you guys to just please ensure to only backtest this on your demo accounts, and make sure you are conversant with how it works before you implement it to your live trading, and come give me good testimonies, guys. I like you guys I like the guys that reach out to give good testimonies. I like it when you follow instructions and you make profits, and you are also grateful enough to reach out again to tell me how this thing really worked. Thank you. It makes sense. It encourages me to keep doing more. It makes me realize that I'm not wasting my time. People are actually benefiting from this thing.